Hello everybody and welcome to a new video. In today's video I will be explaining everything in regards to the daily bias. I will explain it in 3 simple steps, so make sure to grab your notebook and watch it until the end because this is going to be a turning point in your trading career. But before I'm going to explain everything, I would like to give a huge shout out towards the MMXM trader. I learned a lot from him myself, so I would highly suggest you to check him out on different social media platforms. But for now, let's hop right into the video. The first step is understanding premium and discount levels. Because knowing where price is in the current dealing range gives you a lot more insight where price is likely to draw to. But what is a dealing range? A dealing range is a price lag between a swing low and a swing high. When you take a look at the schematic on your screens, you can see that we have a swing high over here and a swing low over here. This entire price lag in this case is your dealing range. To get the correct dealing range on your chart, you will draw your Fibonacci retracement tool above the swing high towards the swing low, and you will get the dealing range on your chart. But what does the dealing range indicate? Well, it indicates if we are trading in an expensive market or in a discounted market. If price is trading above the equilibrium of the Fibonacci retracement tool, which is the midpoint of the tool, we are trading in a premium. If we are trading below equilibrium of the Fibonacci retracement tool, we are trading in a discount. Trading in a premium would mean that we are trading in an expensive market. So if your bias is to look for shorts, you would like to seek shorts in a premium. If you are looking for longs, you would like to buy at a discount. These are the settings that I use for my Fibonacci retracement tool, but you can use whatever settings you personally like. It is just an example of how you could use it yourself, but as said before, you can also use your own preference. Now that you know what the correct dealing range is on your chart, it is important to know what price will always do. Because when you are creating a bias, it is important to know that price only does 2 things. It draws to all highs and lows, or it rebalances an imbalance. Price does nothing more in regards to price delivery. Knowing that price does these 2 things, we'll say the following. So when an imbalance is tagged, price is likely to draw towards an old high or low. Or when an old high or low is taken, price is likely to draw towards an imbalance. Truly understanding this will give you the foundation to anticipate where price is likely going to draw to. But now that we know that price only does 2 things, how do we know how price reaches your draw on liquidity? That is where time frame alignment comes into play. Different time frames are in relation to each other. So this will say that when you have determined your bias on the high time frame, you can go towards the lower time frame because that structure will determine how you will reach your high time frame level. For this video, I have mapped out the following time frames. So when you have determined your bias on the monthly time frame, the daily will give you a structure that shows you how your monthly levels will be reached. For your weekly time frame, it will give you a 4-hour structure, and for the daily time frame, it will give you a 1-hour structure. But price is fractal, so this could be applied to even more time frames. So now we are going to combine the topics that we've discussed so far. Let's start off with looking at this schematic where we are trading from an imbalance towards liquidity. When we take a look at this schematic, you can see that we were trading upwards at first. But when we created this swing high, we displaced down and we broke structure. We created a swing low and now we are trading within this dealing range. We retraced higher into premium levels and we tagged a fair value gap, which is equivalent towards an imbalance. And what did we say? When we tag an imbalance, price is likely to seek an old high or low. Well, we are trading in a bearish environment, so price is likely to draw towards this old low, which is your draw on liquidity in this case. And now we're going to take a look at it the other way around. So when you take a look at this schematic, you can see that we have traded upwards and we created this swing high. Afterwards, we traded down and up again. We took out external range liquidity in the form of this old high. And what did we say? When we take out an old high or low, price is likely to seek an imbalance. What did we have? We have this imbalance right over here in a discount level. Price traded into that and we got higher prices afterwards. Now that we went over the entire theory, let's dive into some real-time chart examples to explain it even more. In this first example, we will be covering the daily chart of US dollar against Swiss franc. But before I'm going to annotate it myself, I would like to give you the opportunity to do it on your own and create a bias yourself. The first thing you should do is map out the correct dealing range on your chart. And when you take a look at this daily chart for USD Swiss franc, you can see that we have created this swing high and this swing low. So this is your entire dealing range in this case. When we created this swing low, we retraced higher back into premium levels. And when we traded back into premium, we can see that we have taken liquidity in the form of this high. Now that you know that liquidity is taken and we are trading in a premium level, you should know what you should be looking out for next. So in this case, what is the next draw on liquidity in this case? Well, let's start off with applying the correct dealing range on our chart. When you take a look at the chart, we can see that we are currently trading within this swing high and this swing low. This is the fractal dealing range. We have stated that we have taken out liquidity. So what did we mention? We have taken out liquidity, so price is likely to seek an imbalance. Where can we find that imbalance? We can find the imbalances right over here in discount levels. This is your next draw on liquidity in this case. A couple of days later, you can see that price perfectly has drawn into the daily fair value gap at a discount level. And why did we say? When you have determined your bias on the daily time frame, the 1 hour time frame gives you the structure and shows you how those daily levels will be reached. So we have taken out the liquidity on the daily time frame, and once we displaced lower on the 1 hour time frame, breaking structure, we went into a sell program. Bearish PD arrays are getting respected and we draw lower until the daily time frame level has been reached in the form of the daily fair value gap. In this second and last example, we will be covering the weekly chart of US dollar against the Japanese yen. But again, make sure to annotate it yourself at first before I'm going to do it for you. And these are the things that you should notice when you have taken a look at the chart. First off, let's map out the correct dealing range. That is formed between this swing low and this swing high. After we have created this swing high, we retrace down towards this weekly imbalance at discount levels. So now that you know we have traded towards an imbalance, what is price likely going to seek next? When your bias was this old high, you're on the right path. Because what did we say? When price is going to trade into an imbalance, price is likely going to seek liquidity in the form of an old high or low. Well, the trend is clearly bullish and we traded towards a discount, so your bias in this case should be the old weekly high. And as you can see, it played out perfectly. After we reached the imbalance, a couple of weeks later, we traded towards our draw on liquidity, which was the old high in this case. And what did we say? We were talking about weekly levels in this case, so the 4 hour time frame gives you the structure on how those weekly levels will be reached. After we broke structure right over here, we went into a buy program. Discounted PD arrays are now giving price support towards higher levels, and eventually we did reach our draw on liquidity in this case. And that brings us to the end of the video. If you digged with the content, I would highly appreciate if you like the video, and if you want to see more content of me, make sure to subscribe. But for now, have a nice rest of your day.